We've just had the FOMC minutes come in and they are dovish. Yes, markets are initially responding positively to the FOMC minutes, which literally just came out 10 minutes ago. Remember, these are the minutes from the November meeting we had earlier this month, which saw 75 basis point rate hike. But what is the market looking to? The market is looking for any clue, any single clue that we could be seeing that all needed pivot. Do we see a dovish tonality? Do the Fed officials start talking about a 50 basis point rate hike? That is what the market is looking for. And that is what we're seeing a response to here. You can see the 5-minute candles here responding. We initially saw a green candle. We're seeing some redness in the markets now as markets digest and read through that full report. I very quickly just scanned through it. I'm going to show you the key highlights, which I found, and how that can affect the price. We're also going to look at the key levels for Bitcoin in the charts, not just here on the 5-minute, but in the longer term, 4-hourly and daily chart as well. Smash on the subscribe button. Click the links in the description if you want to buy any crypto from Bybit or BitGet, the two exchanges I use. And if you appreciate this type of content, let me know in the comments. Remember, this is the Fed rate monitor tool. As you can see here, this is notched down ever so slightly. I've just had a refresh. In fact, let's give it another refresh while we're together here, because literally the markets are moving as we speak. And you see 71% of the market is pricing in a 50 basis points. So 71% of the market is still expecting a pivot at the next meeting, which is not far away now, guys. It's 3 weeks away from this December meeting, and the report gives us some clues. So let's dive straight into this report, which I've marked up a little bit here for us to get into the pertinent bits. Now, the first bit was this. Most conditions that have occurred over the year. Most respondents to the open market desk surveys viewed a 50 basis point increase in the target range the most likely outcome. Now, we know that we're looking at the Fed rate monitor. So it shows that Jerome Powell and the team are very aware that there could be a need for slowing, and the markets are expecting it. So remember, he's aware that this is what the markets are expecting. Let's keep on going down here. I want to share a few other bits with you. So they continue to say that labor market conditions remain quite tight. PCE inflation remained elevated. In September, total non-farm payroll employment posted a solid gain, somewhat slower than the pace seen in recent months, and the employment rate declined 0.2. So he's saying, look, labor market is still tight. I've still got some work to do. He said that CPI continues to remain elevated. We know that the CPI reading continues to be high, but we are seeing some improvements, right? With the inflation reading coming down to 6.2, which was some improvement, particularly compared to the UK here and some of the European areas, which continue to struggle with double digits inflation. It's good to see that headline inflation in the US is down to 7.7. But remember, Jerome Powell wants to keep that sledgehammer in his hand. He wants to say, no, I want to get you down to 2%. That is our target rate. And we need to stay focused until doing that. Okay, let's flick on here where there's a few other bits which I do want to touch upon with you guys. He mentions that participants recognize that Russia's war against Ukraine was causing tremendous human and economic hardship. And he says these are causing an upward pressure on inflation. Okay. He also said participants observed that the labor market had remained very tight with the unemployment rate near historical levels. He said participants agreed that inflation was unacceptably high. We know that. Let's keep going. A few other highlighted points I've got here for you guys. In discussing potential policy actions at upcoming meetings, participants reaffirmed their strong commitment to returning inflation to the committee's 2% level. Okay, now this could be what spooks markets a little bit. So the market's going to have to digest this. There are a few dovish elements in here which I'll come on to, but there's also still some hawkish bits which show that they still mean business. Because remember I spoke about this. When you go back to the Paul Volcker time, he brought inflation down quite quickly, but then it stuck around at that 4 to 6% range for quite a long time. Now Jerome Powell doesn't seem like he's happy just getting us down to 5% or 6% or even 4%. He's saying I need to bring you down to 2%. And he's not changed his tone whatsoever, which shows that he's still got another 5.7% to go, which maybe makes us think that, hang on, he still needs to do some chunky rate hikes in order to make that happen. But here it gets more interesting, guys. Let's keep going. A number of participants observed that as monetary policy approached a stance that was sufficiently restrictive to achieve the committee's goals, it would become appropriate. This is the bit. It would become appropriate to slow the pace of the increase in the target range for the Fed funds rate. In addition, a substantial majority of participants judged A substantial majority, guys, judged that a slowing in the pace of increase would likely soon be appropriate. So, guys, this is the bit that the market needs to concentrate on. We are closer to this pivot than we are further away. Now, whether it happens in December, we don't know. Some of the market priced it in at this November meeting. It didn't happen. Will it happen on December 14th? We don't know. But one thing is for sure, we're in that restrictive territory. At some point, these rate hikes will stop being 75 basis points and it'll be 50 basis points. Then it'll be 25. And then we can start getting out of this cycle and slowly have a pause and then slowly a rate hike. It'll be the start of the end of the innings of this rate hiking cycle. And that is when markets are going to get excited. That is when we start to see things really start to move. So this is the report that everybody's digesting right now. Let me just make sure there's nothing else that I'm missing that I wanted to run through with you guys that I've highlighted. No, that was the main bit. So a mixed bag, some hawkish, some dovish. You can see here, let's see how the US markets are responding to this. They continue to hold their green day. Remember, it's going slightly green into this FOMC meeting, and stocks rise as Fed minutes show smaller rate hikes ahead. Good. They're leading with the headline of what we said, right? They do at some point want to slow down these rate hikes, and that's good news. It's good news that we're on the same page. They're talking the right language. They're starting to telegraph. Remember, the Fed want to telegraph their moves. They want their markets to start understanding. And remember, markets want to front run. Markets want to move ahead of the news. They won't wait till you pivot to price in a pivot, right? And that is why we're seeing that 71% of the market has already priced in that we're going to see 50 basis points at the next meeting. This is what's allowing the markets to have somewhat of a reprieve today. You can see Bitcoin here having a 2.24% day here today. Ethereum moving up 3%. You've got major altcoins moving as well. Phantom up 2.3%. Dogecoin up 3%. You've got 3.25% on Avalanche. But let's get into the Bitcoin chart, because I do want to show you some really important levels. But I do need to remind you guys, check out my TA course. Link is in the description. It's Black Friday, but we don't need Black Friday, because Black Friday every day here, because I've given you my TA course for free. Guys, it's worth thousands of dollars. Ujars.uk/TA. I guarantee if I made it, cost, loads of you guys will be taking it more seriously. Check out the link in the description. Watch it for free. It will not be available for free forever. EMA ribbon, head and shoulders pattern, ascending triangle, descending triangle. Please go watch that. In these bear markets, that's when you need to educate yourself on all these things. Cool. Let's now switch on back up to the let's start with the 4 hourly chart here. I've got something really important to show you. So what I show you here on the 4 hourly, we're struggling to break this EMA ribbon. We worked our way back to the top of the EMA ribbon, and you can see we're starting to get a rejection here. So we need a strong 4 hourly candle with good volume. Look at the volume candles as well in order to get our next move up to 17,500. That's going to be the key level. And that's what we need to work on here on Bitcoin, but it's not going to be easy. There's a bunch of resistance at this 16,700 level here where we got rejected. More importantly, if I head on up to the daily chart, look at where we are. Right? We've fallen quite extendedly from our EMA ribbon. EMA ribbon is sitting at that 17,600 range. Now, why is that an important level? Well, that's our June lows. Right? When all the Terra Luna collapse and the maximum FUD was happening, before the whole FTX drama, that was our lows, 17,600, right here where my cursor is. Now we've managed to breach that. We fell lower. We fell all the way down to 15,500, which, by the way, we predicted exactly here on this channel. We knew we were going to create a lower low, and we knew that we were going to test that low, and it's played out exactly as we expected. Now, you can see the support coming in, which is good, but we're going to see some resistance. I'm expecting us to rally into our EMA ribbon, and then we can see where we move from here. Because what we don't want to see happen is that previous low from the June low, which was initially support, we came down, we bounced, we ran up to 25. We don't want that to start turning into resistance, okay? That's the last thing we want is this. We do not want to run up to here and get rejected back down here. That is not what we want to see here. If we're going to work our way up, I want to break through it. I want to hold it and start trying to get back into that channel where these green lines are here. That's where we need to get back into 18,600 to 22,000 range. We were in there for a very long time. That's where I want to see the price back in order to get some sort of normality here. Until then, we've got to hold bias to the downside. We're still below our EMA ribbon. We are still in a downward trend, and we have to give the bears the respect that they deserve at this point. So until then, this is just the bears having a calling off. Until we turn this daily EMA ribbon bullish, this is just the bears calling off. They could just be chilling for a bit, taking a breather, letting us do this before then throwing us back down to those lower lows. Maybe we test those 14,000s. But the good news is the macro picture is starting to be on our side, okay? So as long as we don't get any FTX drama, some more contagion from Genesis, something else going on, the markets are giving us reason to move in the right direction. If you want further evidence behind that, more so than the Fed meeting minutes, which I've just shared with you right now, let's also take a look at the dollar index. And the dollar index, as this Fed meeting comes out, continues to tumble 2 negative days in a row, showing that not only did we reject the dollar index, this is huge news here, guys. Look at this. When the dollar index broke to the downside of its EMA ribbon, what you would normally expect is for this to come all the way up to its EMA ribbon. Now, it did come up. It had 3 strong days, exactly as we predicted over the weekend, guys. You can check the videos. We said this was going to happen. But look how quickly this has fallen back down again. It's fallen, it didn't even go up all the way to its EMA ribbon. So this is really strong news for Bitcoin. It means that dollar index is showing some significant weakness. And now we need it to lose its 200 exponential moving average. That's this blue line here. Can we lose it to the downside and start working ourselves into a longer term downtrend here? So the macro is looking good, much better than it's been looking for a very long time. And if we didn't have this FTX nuisance hanging over our head, we could be benefiting from some nice moves here on crypto. Don't forget, in yesterday's video, I shared with you that over 50% of all wallets are now in a loss. Over 50% of all people holding Bitcoin are now in a loss. And this has happened in the COVID period. It's happened at the bottom, yes, the bottom of the 2019 bear market. This is a huge bottom indicator, which has a lot of people excited that we are closer to the bottom and the end of this painful bear market than many people think. Not to mention, you got Sam Bankman-Fried coming out today apologizing to a bunch of staff, saying he didn't mean to, he wish he could go back again, and that, he wants to make up this story that suddenly he just one day appeared to have an $8 billion hole and he didn't see it coming as just an honest mistake. I don't know, you guys read into it whatever you want. I just don't want to believe any of this. I don't think anybody can be that incompetent that they just wake up one day sitting on a huge multi-billion-dollar hole. I'm pretty sure that at this point the majority of us think there are more nefarious intentions behind what went on, and we're just gonna have to wait for the relevant parties to dive into it, dig into it, and hopefully transparently share what they found and let us get access to that data. I think that's the least we deserve as victims of this space, right? As people who had money in FTX, as people who represented, who believed in FTX, many people invested in FTX, we're owed that truth. So look forward to hearing that as and when it comes. Look, at the end of the day, we are still in extreme fear, guys. However you want to dress it up, we're in extreme fear right now. And you guys have to ask yourself the question, are you sitting there and building your knowledge on crypto? Are you building your portfolio? Are you building? Do you have a building mentality? Are you tearing things down? Are you giving up? Because the reality is anybody who's done pretty well in crypto has had that feeling where they wanted to quit, had that feeling where the bear market shook them out, where the FUD shook them out, where the wild, wild west and crazy Mt. Gox or Satoshi fears or XYZ, so many things happen, right? But you've got to be able to navigate through these difficult times. And difficult times will always last. And you've got to learn to adapt and evolve because it's survival of the fittest. And if you get shaken out on this bear market, you're going to come back in the next bull market and say, why did I get shaken out, right? And then you're going to have to wait for the next cycle. And who knows if you're going to have the resolve in the next cycle either. So I hope you guys enjoyed this video. If you appreciate this quick live update on exactly what the FOMC minutes entailed, smash up likes. Don't forget to subscribe. It's positive. It's good. The Fed are now accepting that they need to start looking at slowing these rate hikes down. The most positive thing is they're not talking about higher rate hikes, right? That's a good thing that a lot of people are not talking about. It's good that they're not talking about 75 basis points again, or even worse, 100 basis points. So let's hope that sooner rather than later we can get 50 basis points and we can start pivoting away from these huge rate hikes. Hope you guys enjoyed. Smash up likes, go watch this video here, and I'll see you in the next one.